Hi, and welcome to another edition of the Financial Advocate Podcast. I am Colin Meeks, certified financial planner here with Maryland Financial Advocates in beautiful sunny Baltimore, Maryland. Here with Ryan.
How are you, everybody? I'm an LPL financial planner.
There we go. So, big introductions is what we're all about here. We are, as of the taping of this, we're in the middle of March, in the midst of all this coronavirus crisis, and so we're dealing with we're talking to a lot of clients on the phone, dealing with a lot of their concerns. So if you do have, if you're a client, obviously we want to talk to you, but if you're not a client and you just want another perspective on things, always feel free to get in touch with us. We're always available to talk to you. What we wanted to talk about today, as you know, we're all about the financial planning process. We do special needs financial planning, we do a lot of elder care financial planning, family financial planning, we try to, with our clients, we try to sit down and go through what they need and what it is they're trying to address, and then sort of fit whatever financial planning strategies, products into that. So that they're better off after they meet with us than they were before. So in that vein, we have today, and this is somebody or something that we don't do a whole lot of work with, admittedly, and I have a feeling after this we will. It has to do with disability insurance. Have David Beck, who is a regional brokerage director of the Disability Insurance Services, and we want to talk a little bit today about disability insurance, what you may already have, why you may want to consider looking at it, why it's important, why it may not be important. So we never really talked about it before, so we just wanted to have an expert in and sort of pick his brain and see if there's something that we come up with that would help you out for listening. So welcome, David.
Thank you for having me.
Sure. So just to start out, disability insurance, give us a little background on, why people should look at it.
Yeah, disability insurance, it's a great hedge. It's a great product. What it does, if anything, I realize that being passionate about an insurance product might be an oxymoron, but I'm more passionate about what it can do for people. It is often overlooked in the financial planning space, but that's why you have people like me in disability insurance to help facilitate the heightening of that in the marketplace.
Yeah.
So a little background with me with the introduction. So I've been in the disability world since 2006. It's very near and dear to my heart, being through a couple claim scenarios with people in my family.
Okay.
So I can see what having it does for family and what doesn't have it. Like not having it,
right,
what can do with the detriment to it. And why I like working with financial advisors and financial planners like yourselves is it's often the underpinnings of a sound financial plan. While you guys are doing such a great job of putting your clients on the track to a successful retirement by building and accumulating assets, I'm the protector. I help you protect those assets for those clients.
Yeah.
So statistically speaking, it's 1 in 4 before the age of 65 will go down for 90 days or longer. And I always say this to set up clients when they're talking about disability insurance, is that you're going to make a mistake. It's just which mistake do you want to make?
Right.
You want to make a big mistake or you want to make a little mistake? Mm-hmm. And to expound on that, the little mistake is paying the premium and never using it.
Yep.
Right? Because the good thing is you never came down with the coronavirus, you never missed work. 90% of disabilities are illness rather than injury. And the big mistake is needing it and not having it.
I think that's huge, what you just said, because I think a lot of people look at disability insurance as, well, what's the case of me walking and falling down the steps? And it has almost nothing to do with that.
Correct. Yeah.
We're talking about somebody has an unexpected heart attack, or they get cancer, or they get something where it's going to put them out of commission for an indefinite period of time.
Mm-hmm. Staph infections, anoxic brain injuries, things that people don't think about.
Yeah.
Mm-hmm. Yeah.
I mean, we're not talking Aflac stuff here, right? I mean, that's...
No. We're talking a strategy that is positioned appropriately inside of your financial plan.
Yeah.
To where when you're looking at these Monte Carlo simulators that you guys are doing, that if they pay the premium, they still have over an 80-90% chance of success. Right. So that premium's not really taken away from the plan.
Yeah.
If they go on claim, you still have above 70% of chance right? Because the average claim is 2.5 years.
Okay.
So that's where it fits soundly in the plan. And then I realize that disability insurance has a lot of moving parts. You guys don't need to worry about that. When you partner with somebody like DIS, we take all that off your plate for your client.
Yeah. And we don't want to, when we're sitting down with the client, as much as we want them to know the nuts and bolts and all the bells and whistles on the policy work, they walk out of our office and they want to know, if I get disable, am I covered? How much money's in my pocket every month that wasn't going to be there?
Yeah.
That's,
The guys gloss over quickly.
Oh,
you know,
man.
when you get into details.
Oh, for sure.
But like you said, we don't know the details of disability insurance, which you do. The same that we know the financial ins and outs that our clients don't. So
Correct.
Everybody's a specialist for somebody.
Yeah, correct.
And so a lot of the younger families we work with, in our special needs planning practice, they'll have, they're working at a company that may offer some sort of disability coverage. What's the best strategy for somebody that they're thinking, well, I don't need to worry about it to get a policy on my own because I'm already covered at work. But then you ask them what they have, and they don't really know. Like, what's the best strategy for them to figure that out?
That's a great point. The best strategy is to review it. Review it with a financial advisor. Review it with somebody that is actually going to set the reality versus the expectation of what they have to make sure that it's crystal clear. Because often, actually, my LinkedIn post was often when they find out what the reality of what they have through work is far too late, and they find that out when they go and claim.
Yeah.
With that said, group insurance is really good.
Mm-hmm.
I am not in the business of replacing group insurance. I'm in the business of making sure they understand what they have and possibly supplementing it in some shape or form.
Yeah.
There are instances where they don't need to supplement it, but what you need to be clear on. So group disability, everybody gets it. You can't discriminate. So
Yeah.
everybody gets the same thing. So there's no individual underwriting. So you're going to have typical percentage of base earnings. So if you're working with a young family, that's base plus commissions, or a business owner has K1s or bonuses.
Mm-hmm.
That's not covered under base earnings. So if it's 60% up to a monthly cap of say 6,000, I know I'm getting in the weeds,
That's right.
but it's only going to cover that base salary.
Okay.
And then most of the time it's employer paid, so then you got to take taxes off the back end.
Right. So to give an example, if we have somebody's making $100,000 a year and they have that base coverage, so they're getting $60,000 a year in disability, if
Yep, $5,000 a month.
so $5,000 a month, and then if their employer is paying for it, taxes are taken out of that. So if you have somebody that's used to making $100,000 a year, they could very easily be down to $40,000 a
Correct.
year. And that's on the surface, it seems like a lot, but when you're not working and you still have all your mortgage and your car payments and kids and all that stuff coming in, it's that's not replacing 100%.
Correct.
So that's the goal, is not, we're not always shooting for 100%, but something closer than where you are.
Get you back up to that 60%-ish
Yeah.
level.
Yeah, and Ryan and I do this, we do this a lot with just individual life insurance. When people say, oh, I'm covered through work with a term policy, or, we'll look at that and be like, well, you are, but, number one, if you leave, you don't have to take it with you. Number two, if, the rates are going up and you're maybe paying a lot more because there is that group component of it. So, actually piecing this out and looking at it on an individual basis a lot of times makes a whole lot of sense.
Absolutely, especially because most of the time when I see term insurance with somebody at work, it's either a specific amount, which is usually pretty small, like $15,000, or it's like a year of their salary.
Right.
Which most people, if you're using insurance, you're trying to replace the person you lost and the salary for years. So
Yeah.
once is not enough. So that's why anybody at work should review everything, especially their disability insurance, for that reason.
100%.
Yeah.
And David, you said earlier, we say this a lot too, we've, that small mistake versus the big mistake. We've never had somebody say, that with a life insurance, when we do a death claim, that's too big of a check.
Right.
Yeah.
People, I bought we bought too much life insurance, and we've never delivered a check and had somebody try to give some of it back. So, not that you want to overinsure yourself, but you do want to at least have that good base so that all those other things, your investments and your house and any real estate or any other types of things that you have stay intact if a crisis does happen.
Yeah.
Mm-hmm.
So occupation-wise, let's talk about that a little bit, because I think not everybody can get disability coverage, right?
There are plenty of carriers out there in a small disability insurance world where we can almost insure every occupation.
Okay, well that's good.
It is on a case-by-case basis, and there's more of an art than a science to it.
Okay.
But yeah.
So we have white collar versus blue collar. Is they make that distinction obviously?
Yes.
Okay.
I'm trying to figure out a better distinction instead of collars, but I use the same thing.
Okay.
You know, so yeah, there's white collars, and I say those are the people that shower before work instead of after.
Okay.
But the people that shower after work, they have incomes, they have families, they have labor-intensive jobs, and you know sometimes they're the millionaires next door.
Yeah.
Right.
The HVAC guys, the plumbers, you know, don't overlook those people.
Yeah. Right. Yeah, and I would say we went through our book of clients. I mean, I can think of my top 5 clients: a bricklayer, an air conditioner. I mean,
there you go.
People that have built businesses based on their occupation. So it's not always.
Absolutely.
I feel like if we could line them up, nobody would ever know.
Yeah.
You'd never see. It's ripped jeans and torn hoodies, and probably why they have their millions is saving their money and not doing things they don't need and working hard. Obviously,
Yeah, being frugal.
Yeah.
Yep.
So let's talk a little bit more about just the coverage in general. When somebody applies for coverage, I mean, like, you know, what sort of things does an underwriter look at? I mean, if somebody's not medical wise, but you know, when somebody looks at disability, if we come up with a financial plan for somebody and say, okay, let's, you know, maybe you need an extra $2,000 or $3,000 a month. How do you go about helping to solve that?
Correct. One of them is occupation.
Okay.
Right. So the drivers of the premium for consideration of coverage is what do they do? Right. So we covered that. Income. Income. You have to have an earned income to qualify for disability insurance.
Right.
The continuum of it is the long-term care policy, right? But you don't have to have an income, an earned income for that. But they're going to look at what your income is. If you're a W-2, it's just the gross number, whatever the salary is.
Okay.
All right, so we're going to look at that. If it's a business owner, 1099, sole props, somebody with a Schedule C, net income. Okay, so we're going to go with what they after their deductions to solve for insurable income for the benefit. Gender's big. So unlike life insurance, where the males, the premiums are higher than females, it's the other way around, where females are higher cost of insurance inherently for disability insurance than males.
Okay.
So that's something to be cognizant of when you're talking.
Because being healthier doesn't benefit them in the case because they're less likely to use the policy.
Females?
Yeah.
More likely.
Oh, more likely.
Yeah, which is why premiums are higher.
Oh, okay.
So you have things like pregnancy.
Okay.
You have a lot of other health issues and claims experience with the females.
Right.
You know, they tend to be less macho than guys, right?
Right.
You know, the guys will be like, I'll go to the doctor later, and that's true.
Yeah. Very good point. Very good point.
You know, females tend to listen to their bodies and go to the doctor more. State in which they live. So that's interesting because different states, just like car insurance, different zip codes have higher premiums because you're more apt to get in car accidents. The zip code or states are the same way. Premiums don't vary often from state to state, but they do. So very, very, very important to think about.
Okay.
And then what else am I? Age. So there is a maximum issue age for disability insurance in the domestic markets before you start going to like the Lloyds of the London, which people have heard of.
Okay.
That max age is about 60 years old.
Okay. Yeah, and that's typically why we have a lot of clients that are close to that age or getting there, so that's one of the reasons we don't really address this too much.
Yeah.
Just talk a little bit about the Social Security disability, because people always say, well, you know, if I get disabled, I'll just file for SSDI.
Yeah.
What's the reality of that?
So that's a great point. And it's a good safety blanket, but getting approved is one thing.
Right.
So it's about a 61% approval rate after 2 years.
Okay.
All right. So it
So
takes.
what do you do for 2 years, right?
Exactly. Exactly. So most people are declined the first time they apply. It takes about an average of 2 years to get approved, and then once you're approved, the benefit's probably about $1,100. And depending on household income and other assets, it could be a taxable event.
Okay.
Too. So yeah, I think it's good, but just don't rely.
Right. $1,100 is not helping anybody out.
Yeah, I think it's $1,100 for males, and it's less for females because of still the whole gap thing that I'm not going to get into.
Okay.
Right.
So if you're out there listening to this, you hear people, you know, everybody knows somebody on Social Security disability, it seems.
Mm-hmm.
Just know that they're not, you know, they might they, they're not getting rich by any stretch of the imagination.
Correct.
Yeah.
Correct.
Great point also, not to lean on Social Security, I think in all aspects.
Yeah.
I've had unfortunate conversations with people who are telling me like the only thing they have is Social Security and they count on it going up by the cost of living, which of course it barely does. So
Right.
in terms of disability or anything, it's difficult to lean on Social Security for replacing anything. It's a small piece. You always need something else, I feel like, in there.
Yeah. It's sort of a last resort.
Exactly.
What else? We got, we're sort of coming to a good time number here. I think we've come up with some good information. Did we miss anything?
The only thing I have is, at what point do you think it's important to instill the disability conversation in the financial plan? Do you think it can go wherever, or do you think beginning or end, or?
So that's a great point, because back to what you guys said at first is you don't do a lot of disability insurance, so now is the time to talk about it, especially in pandemics like we are in right now. The younger you buy it, the better off that client's going to be, because the cost of insurance is going to be down.
Mm-hmm.
And the good thing about disability insurance is you don't have to keep buying it every single year, or you don't have to worry about it running out, because it's a term. It's a 10-year term, 20-year term, 30-year term. Once they're enforced, they're also very malleable. But when you're trying to talk about the income replacement conversation with clients now that are existing, set them up in the review. Because I'm sure you guys do annual reviews or quarterly reviews, what have you. Add that to the agenda and then talk about it. And then do the review of their group benefits and then ask them if they would be opposed to looking into this.
Yeah.
And I don't think there's any wrong time to talk about it. What I've found is that advisors are talking about the life insurance. However, you never die and then become sick. It's always the other way around.
Okay.
So we want to talk about it now. And really, you can package it all together.
Gotcha.
Mhm.
Gotcha. Yeah, because I think it's when we meet with somebody, we send out a packet before they come in, not a packet, a checklist. And one of the things we want them to bring in is their all their employee benefits.
Yeah.
And, we always see, we look at their life insurance, but there's always, not always, but most of the time there's a deduction for some sort of disability.
Yeah.
We need to do a better job of digging in and making sure of, exactly what they have.
Yeah.
Okay, well, good enough. So, David, thank you for sharing with us. I'm sure, it's been very insightful for everybody listening, so it has for me anyway. Ryan, our process when we meet, if you're listening to this and you haven't checked us out, we do a lot of virtual planning. So that means that if you're not in Maryland or if you're not close to our office, we can still do business. We can talk to you over Zoom. We do a two-process sort of get to know you meeting. If you're interested in that, we don't try to, we're just looking to get to know you, learn a little bit more about you, explain to you how we work, and see if there's a good fit. So we're more than happy to set that up for you. We'll put a link in the podcast to that. What else?
That's pretty much it.
Got it?
Yeah, I appreciate you coming by and explaining some of these points. I'm sure we'll be in touch.
Thank you so much for having me.
Yeah,
This is
yeah,
awesome.
yeah. This is great. I'd be happy to have you back. I think one of the benefits of having a podcast and meeting a few times is once you say something, you end up leading in different directions. Different things are going on. Maybe we're outside the coronavirus and it sparks other things. But it's nice to keep touching base because there's a lot of disability insurance information. So sometimes it's easy to take it in pieces.
Absolutely.
So
Absolutely.
yeah.
All right, let's finish up. Good enough. Thanks. We'll talk to you next time.
Thank you.
Thanks so much.